As always, we begin this video right where we left off in the previous, and if you're having a hard time following or you, you start in the middle here of the series, you can just do a search for beginner day trading introduction and do a filter by date. You should end up being able to find this and just go to videos and maybe sort from oldest to newest and just follow along. In this video, the plan is to talk about resistance and support, touch on volatility, sideways, high frequency swing trading. Let's talk resistance and support. Here we have a graph, a chart. I'm using a line chart, not candles, because it was just easier to draw. So here's price, the vertical axis, time, the horizontal. I don't care if it's minutes, days, weeks, whatever it is, doesn't matter. This is the price per share of some stock. So when you see or read the term support, what do they say? Well, at the most basic level, this, for example, is a support line, meaning that at this price, whatever it is, the price per share has not gone in this entire time below that price. And that's a good thing. So you know, okay, no matter what, I mean, like obviously we can't predict the future, but the way it's been looking, no matter what, you can expect that you're safe, that you're going to be okay with this staying above this line, which meant, for example, if you had bought some shares way back somewhere some other time below this line, then you're safe. Now that we have a very basic understanding of support, let's talk resistance. I can say that over this time, the stock price has not been able to break past this line in price. So this is the line of resistance. Let's say, for example, that this graph measures, I don't know, let's call it days, lots of days here. So total of, who knows, maybe a couple of months or so, some weeks. We can see something else here though, because from say here to here, this was a level of support, but actually I can draw another new higher level of support right here, right? It has not gone below this level of support after a certain time. And I can say more than that. I can say, here's a new level of support. And I can say, here's a new level of support. With the little bit of understanding that we have of support, could we also not say that starting from this point, we have a trend line? So the support level has been increasing. Even now, without you knowing a lot, you should see this as a good thing, right? The distance between the support and the resistance is getting smaller. Now that we know very basic of support and resistance, how could we use that? Well, for one thing, if the stock gets anywhere near down here into the support levels, I would want to buy some. And I should know that the higher it gets and the closer it gets to the resistance, the more at risk I am of losing money, so I may want to sell or take profit. Maybe I can, and so I can swing this stock. If it has high volatility and it's also trending positive like this, there was support level, then I could stay here. I could buy, the traditional, very easy concept: buy low, sell high, buy low, sell high. So that's one thing that I can gain from this. The other thing that I can gain from this is like, okay, if the support is getting better, closer to the resistance, eventually we're going to hit something called breakout, which we'll talk about later. We covered a little bit of resistance and support, and we're going to keep going back to that. I want to introduce volatility, and I alluded to high frequency swing trading. They say a picture is worth a bunch of words, right? So here's one. This is what I would say is not a volatile stock. Let's say this is just, I don't know, it doesn't matter whatever level you're trading at, say it's cents, let's call this small, very small fractions of a cent. Let's say you were trading dollar stocks and this is like a cent difference. That's not a volatile stock. If you think that I haven't seen this, you are mistaken. I have seen this. I actually know the symbol for the stock that I've seen. I'm not going to share it. This is a game. There are trading houses or people, individuals, they're playing games. That's very obvious. First of all, the volume is probably not there, and it's just swinging between 2 or at most 3 price levels. This is not what I would consider a volatile stock. This is a big no-no. This is something you want to stay away from. I want to add one more term, sideways. Here's a stock that I would consider volatile. Notice the various swings. Some have upward trends, downward trends, and also sideways trends. Here's something that could be considered a sideways trend right here, where it doesn't seem to be trending one way or the other. So it kind of went up, down a little bit, sideways for some time, then now it's trending up, but still kind of volatile. And let's talk about high frequency swing trading. So here we have, now that we know a little bit more, we have a base support line here, which is, we're considering it safe, and we can buy near here. Here we have a resistance line, and we can also see that the support seems to be increasing, except we were kind of surprised here, but then surprised again in a positive way. But you can swing this stock. Like you could stay right here during the day if you have funds, and you can buy and sell, buy and sell. That would be high frequency trading. So we introduced all 4 of these in a very basic way, and we'll be talking more about them as time goes on. See you in the next video.